so there's two main areas in terms of thinking about keeping your cost low. We know that the market can be really unpredictable, and we can't really predict what the performance is going to be of the market on any given day. We don't know what it's going to do tomorrow or next week or next month or next year. But the only thing that we really can control is how much we actually spend. So that comes down to two main areas: management fees and brokerage fees. So let's talk about investment fees, essentially. So management fees. In the next slide, actually, you can kind of see that there's a very slight difference in fees, but it can actually impact your portfolio a lot. There's a few different types of management fees. You can look at management expense ratios, especially of ETFs. If you're working with a financial advisor who's managing your investments, they might have a fee, or there's also fees that are associated with your super due to a specific product that you're invested in. Sometimes these fees are quite hidden, so it's really important to know how much of your asset or how much of your costs are going to fees. And sometimes fees might seem quite small. You know, you hear something like 1%, and it doesn't seem as big as 20% of a credit card fee, but really that percent can add up quite quickly. So if you're looking at this graph, the very top is if there were no fees at all associated to a specific investment, and over 30 years, how it would perform. The second one down is 0.25, and the third one down is 0.62 of the fees. So it doesn't seem like a lot. There's just a few basis points in difference. However, it's about $100,000 difference in what money ends up in your pocket based on these fees. And this is only a 30-year horizon. Imagine if this was 50 or 60 years, especially as people are living longer. It kind of can eat into your actual investments quite a bit. I know when I first started investing back in Canada, we have some of the highest management fees in the world. I had fees that were 2.5%. And you can only imagine how much that would eat into my actual investments. So fees are quite important. The other part of fees is brokerage fees. Again, it's important to kind of try to keep these as low as possible. This fee is associated to when you're transacting. So if you buy and sell, a good rule of thumb is to try to have your brokerage fee lower than 1% of your investment cost. So if you're investing about $1,000, you would want your fee to be $10 or less. Pearler just lowered its own fees to $5.50 prepaid or $6.50 for a casual trade. And also you're able to mitigate any of those fees by referring friends to the platform as well. So it's just another way to kind of keep your fees low along that.
Oh, thanks for that, Anna. Yeah, I think that's really good. I mean, like we were saying, we've been saying this whole time, right? We can't time the market. There's not much that we have a lot of control over. But those management fees, I had those really high management fees in Canada too. It's pretty gross to think about. But yeah, those are really important. Again, they don't seem really big, but they do add up. And brokerage fees as well. And remembering that you pay them both ways usually, when you buy and when you sell. So you have to kind of keep that in mind as well. That's really great. And Jessica, can you tell us a little bit more about tax? Because we kind of view tax as well, right, as something that we can do to kind of keep more money in our pockets or be tax effective. Can you talk a little bit about that?
Sure. So I guess tax, unfortunately, for the most part, is a cost that is relatively unavoidable in life in general. However, there are certain things that I guess you can do in terms of how you manage the process of tax, which Sharesight helps and I'll talk you through that now. So the first thing is obviously outside of kind of working with your accountant and what Sharesight helps you track, index ETFs, they can be a tax efficient way to build wealth because they generally do pursue a buy and hold strategy as they seek to track a specific benchmark. Because of this, there's a lot lower turnover in ETF portfolios, which can minimize your capital gains as well as your brokerage potentially, and the distributions as well. All of these things are tracked through Sharesight. Now, with that in mind, you'd almost invariably be getting advice from or working with an accountant to understand your tax liability, or hopefully, maybe even in the opposite direction. But generally, when it comes to the cost of managing your tax affairs, if your accountant is spending a lot of time gathering data on your behalf and putting that into a usable format, that can really blow out the fees that you pay your accountant to manage your tax affairs and give you the advice that you're after. Now, if you use something like Sharesight automates all of the record keeping for you. We mentioned the tracking of dividends and taxable income, as well as that all happens in an automated fashion within Sharesight. And we also have specific tax planning tools that your accountant can use, or you can use in conjunction with your accountant, to help you understand any unrealized CGT liability you might have, and what options you have to offset any CGT liability you might have with some gains with some losses within the rest of your portfolio. So that's something worth considering, thinking about the tax efficiency of your investments, working with your accountant in an efficient way to really minimize those costs, and working with your accountant to understand if you can minimize the cost of tax itself.
Perfect. Thank you for that, Jessica. Appreciate it. Yeah. Doing the most that you can, so you're not paying your accountant to chase down dividend statements. That's a huge thing that we hear from investors. You've tried to hustle so hard to make money and kind of squirrel money away and invest it, and then you get hit with a massive tax bill. So I guess it's not just at tax time too, it's staying ahead of it throughout the year, so you kind of know what's happening, so you don't get that surprise from the accountant. But yeah, at least the accountant has everything they need, so you're not spending hours and hours yourself wasting time figuring that out for them, or you're not paying them to kind of fill in the gaps as well. So yeah, really, really good advice. Thanks for that, Jessica.